On Money Monk, we have yet another dignitary who's joined us today. We have Atul Joshi, MD and CEO of Oyster Capitall. Welcome to the show, sir. Thank you so much for taking your precious time out on this. And I wanted to ask you, we're facing, just like how US is currently facing banking crisis right now, as we all know. Are we also seeing a similar picture in India in the coming times, like how it was in the Silicon Valley case? So, and how far is India prepared if at all such a crisis arrives in India? What do you think?
I don't think there is any crisis that India is going to face. We might see a small bump in terms of personal loans and MSMEs going through in terms of NPA numbers, but that is a function of two things. One is, of course, the global demand coming off, and the second is interest rate, which is on the high. If the RBI is able to manage the interest rate risk of the MSMEs and the personal loans, I don't think we are going to see any problem whatsoever. SVB is something which, again, let's understand that there was no cash loss. It was a book loss, mark to market, expected loss if they were to sell. Had the government really bought out whatever securities they had, there would have been no loss. So I don't think there is any comparison between India and US. Our RBI is one of the best central banks in the world and more than capable of managing any such situations. We will not even have ripple effect of SVB to my mind.
Since you mentioned about loans, sir, if we talk about home loans, the rates are right now at around 10%. So, and the layoffs are also happening simultaneously. So, on a micro crisis scenario, if at all, do you think the NPA will keep increasing or will shoot up?
No, NPAs in the personal loans will shoot up. If you just look at the numbers, 2010, we had about 6 lakh crores of personal loans. 2020 March, we had about 25 lakh crores of personal loans. By December 2022, in just about 30 months, the personal loans have increased now to 40 lakh crores. Add to it the lending by NBFCs, microfinance institution, digital technical, digitech platforms. So overall, about 35 crore people in India have borrowed, and they are not in a position to set off the EMIs because the salaries have not kept pace with the interest rate or the EMI rises. So obviously there is going to be some bit of NPAs that will come in. The banks are more than capable of managing that risk, either by increasing the maturity or going back once the RBI rolls back repo rate, they can roll back the EMI, and the interest rate risk of the personal loans is quite manageable. But yes, in the short term, before that is done, we will see a little bit of uptick in the personal loans NPAs.
A quick take on the repo rates. So how many more revisions do you think are we going to see?
I think one. I was expecting RBI would halt last time, but I think RBI is yet looking at some direction from the US, which is not very good. But I think by October we should start seeing the interest rate reductions, and this would actually be necessitated by the global scenario, the demand position, and the position at home. So I think we are all set to see interest rate reductions by October this year.
Thank you so much, Atulji, for joining us. That was Atul Joshi from Oyster Capitall joining us, giving us quite a bit of foresights when it comes to the economy. Keep watching Money9 and Money Monk.